long agenda.
Okay. Some of it's in the form of announcements.
Okay, that's.
Okay, well, anyway,
Get started.
welcome to the May 21st meeting of the Merrimack. I got a light. Got me now? Yes. Must have gone off when I moved it. So, good morning, everybody. I'm Chris Christensen. This is, we're welcoming you to the May 21st meeting of the Town of Merrimack Trustees of Trust Funds. And to my left, Trustee Bill Wilkes. To my right, Trustee Jack Balcom.
Wear what I want to wear.
Say what? Okay, and we have some guests. We'll get to them in a minute. Town Treasurer, Finance Director, Tom Boland is on my far left. And we have guests from Cambridge Trust Company. If you'd like to introduce yourselves.
Sure, I'm Judy Noel.
Eric Chisholm. Dave Lynch.
Lindsay Donovan.
Okay, thank you all. And we also have a visitor.
Michelle Holton from Merrimack Village District.
Thank you, Michelle. I don't know if you're on the microphone. So Michelle Holton from the Merrimack Village District. And our first order of business is the minutes of our April 23rd meeting. Do we have a motion?
I move we accept the minutes of April 23rd.
Second it.
All in favor?
Aye.
Aye, 3-0-0. And excuse me. The next item on the agenda is capital reserve fund plans. And basically what we're looking at here is what various groups that have capital reserve funds are going to need in the next 6 and 12 months. And I don't expect to take this very long, but certainly our folks from Cambridge Trust need to know what our liquidity needs are going to be. So, Michelle, you're the first one on the agenda. If you want to just give us a quick
Certainly.
listing, and do you have a handout or anything, or we just?
No, it's
all very simple.
Yeah, we just have one item for the future, but as I had mentioned to you recently, we'll be putting in a request for just under $900,000 next week for various items. We had mentioned that in the past, but after that, the only item we have in the next 6 months or so is a purchase of a 10-wheel truck at $175,000 coming out of the equipment and facilities. And we would anticipate putting in the request near the end of the year. End of the calendar year.
Okay. You probably want to put the request in November since we don't meet in December.
Okay, all right, I will note that.
As long as you get the final receipt, we're good for that.
Okay, very good.
Tom, do you have anything from the town?
Taking a look at where we're at, we got about $1,750,000 as of now that we'll be requesting next month in early June. There's still obviously a few more weeks of invoices that could come through and add to that number. So, and we are approaching year end, so sometimes you tend to get some large purchases right before the end of the fiscal year. So it'll be somewhere in that $1.8 to $2 million range. And then there is nothing else anticipated until same time next year.
Okay. We don't have anybody here from the school district. They don't have huge anticipated capital reserve fund expenditures. They sometimes find out in September when they start the new enrollments that they'll need something from, let's say the remedial reading program or something like that, but the cash flow there is not as significant as it is in the others. So Judy, do you or anybody else in your team have any questions about the pending capital reserve fund needs? Okay, at least we know,
What I
at
heard
least we
was
know you're
there'll be
still
a
there.
$900,000 request coming from the Merrimack Village District in the next week or so, and then Tom indicated another 1.8 million withdrawal between now and June, and there would be no other liquidity needs until next year.
That's pretty close.
Except for the truck for the Merrimack Village District in the November, December timeframe of
Oh, the 175,000, right? Yes.
Yep.
Right.
Okay, sorry, I did get that as well.
Okay, and probably the town, whatever that amount happens to be, I think our meeting is June
18.
18th. So we've got a short time frame there for us to approve a number on the 18th and then have the funds wired before the end of the fiscal year. But I think we've been able to do that without
Done it in the past.
delays in the past, so we should be good there.
Okay.
Michelle or anybody else have anything else to add to this topic?
No? Thank you.
Thank you for coming for a 30-second presentation, Michelle.
Well, thanks for having me.
You're welcome to stay.
I'll listen to the Cambridge Trust presentation.
Okay, the next item is a review from Cambridge Trust on the overall portfolio and economic issues in the world, if you will. So I'm going to turn that over to Cambridge Trust team.
Okay. I'll start off, and members of the team can chime in as needed. Starting with the economy, the markets have been very strong this year. S&P's up 11%, but you've also seen a little bit of that rotation happen away from growth into more values or dividend-paying stocks. So I think if you look at the performance, which is included in the package, the performance it has improved this year as that segment of the market, dividend-paying stocks, are more in favor than what they were last year at this time when it was more growth stocks were leading the charge higher coming out of, the depths of the pandemic. The Fed, released their minutes. They're starting to talk about possibly talking about tapering. So they took one of the potential talking points out. So it looks like, I think, probably sometime over the summer at the Jackson Hole retreat, the Fed may actually put in some sort of a taper of the asset purchases that they currently have in place and start unwinding that down. That's what the market's anticipating right now. The biggest talk of the markets right now is inflation. The Fed seems to believe that it's transitory. Our view is that the markets won't wait for the Fed to make it transitory or say it is transitory. The markets will react. And there's sort of a dichotomy happening in the market right now, especially in the bond market, where real yields, those yields that are measured by U.S. Treasuries, aren't all that high. They've moved higher year over year, especially coming out of the depths of the pandemic with all the, highly accommodative easing programs in place. 10-year Treasuries 1.6 this morning. But if you look at the break-even spreads, which is, takes into account, what the market's pricing in for break-even inflation, and that's moved significantly higher. So you have one part of the market, so inflation protection is a little more expensive to get in the market as break-even spreads have moved higher, but actual nominal yields are lower, and real yields are actually still negative. With the uptick that we saw a week or so ago from CPI. So I think, in the next couple of weeks and months, there'll be, one part of the market will be right, one is usually wrong. And as more data comes out, the markets will start reacting to that data, which could put pressure on rates to move higher. But I think overall, it's been a pretty good start to the year with the markets up about 11%. And obviously with the, the successful vaccination rollout, the reopening of the economies, less restrictive measures. And, basically, I think New Hampshire and Massachusetts are pretty much wide open for business. No mask requirements, especially starting in Massachusetts on May 29th. So, there is that optimism that the second half of this year could have some very strong GDP prints. First quarter was at 6%. Talk second and third quarter this year could see 10% type print. So you're going to have this near term. Obviously, you're coming off of the extreme lows of last year, but you're going to see near term very strong growth. And the Fed seems to think that as you move through 22 and 23, that will move more towards trend line, which has been 2 to 2.5% growth and 1 to 1.5% inflation. If that's, it remains to be seen if they can successfully orchestrate that. More data to come on that. But as far as the portfolios, on the first page of the executive
let me hold you up
summary,
just for a second. Let me hold you up just for a second, Eric, and see if there's
Sure.
any questions about the inflation or the other things you've mentioned so far.
Sure. Happy if there's any questions.
When will lumber prices come down?
That's a great question. They're only out. If you can find lumber, that's the problem. But yeah, you have a very strong housing market right now, so there's a lot of demand, and supply is limited, which is really causing that uptick, and not just in lumber prices, but in a lot of the commodities as well.
Yeah. I'm with your assumptions so far.
And
What's that?
you feel pretty comfortable in long term for 1 or 1.5% inflation?
Well, that's what the Fed's talking about right now, and that's what we've trend lined. If you go back and look at charts of, core PCE, that's the Fed's preferred measure of inflation. We really haven't had periods of, 2% plus of inflation. So, maybe that 2% is the wrong, ceiling or the wrong number to target. And again, their target is, even if inflation reaches 2%, doesn't necessarily mean that the Fed will move. They want to see it can be sustained at 2% before they would start, some sort of a tightening program and take the accommodation down further. But, there's a lot of, products, and a lot of this growth has been tied to, low interest rates. You look at, the strength in the housing market, it's being fueled by record low mortgage rates. You're still, last year this time you had, mid 2% handles for a 30-year product, and this year you have low to mid threes. So by historical standards, it's cheap money to finance homes, and it's caused a pretty substantial boom in the housing market. But it's not like what we had back in 08, 09. Underwriting standards are still very, very strict, and there's no, fake doc or low doc loans that are in the pipelines right now. So it's all coming off of, strict credit and underwriting standards. So it's not like the shallow banking system that we had back in 08, 09, that there's, this time around it is much different.
Okay, I didn't mean to interrupt you too much. Let's go to the next paragraph that you were ready to start with.
Yeah, so I'm just going to go through the book, a couple of pages in the book, starting with the executive summary. You can see, from November through May, the increase in yield in the portfolios. The equity yield, is about almost 3%. Again, it's down a couple of basis points from our March meeting, just because of the market's up 5% since then. So as prices went up, the yields came down a little bit. As David mentioned, we're dedicating more resources to finding higher yielding stocks for the portfolios. A recent purchase was Rio Tinto, diversified global mining company. It has 5+% dividend yield. We're in the process right now of researching, preferred stock offerings via either an active or a passive product to potentially add to the portfolios in the near term. So, we continue to find opportunities to increase the current yield to the portfolio, and year over year, the yields have increased, especially with, the last round of trades that we have made. We did 3 rounds of trades. Basically, didn't want to do it all in one day, but we did it, in a very deliberate fashion, working with Dave and Lindsay to, restructure the portfolio, reduce some of the holdings, not have as many stocks in the portfolio, but increase the ones that have the higher yield that we continue to like. and make those bigger percents of the portfolio in order to increase the overall yield. And, the goal being we continue to find, as we find opportunities for more dividend yielding stocks, we will continue to add those to the portfolios going forward. And I think if you look on the next page, I pretty much summed it up. Total portfolio returns were especially for the capital reserves, they're meeting the guidelines. They actually have slightly positive returns this year, considering the rise in interest rates that we've had. And the overall, if you look at common principal, common income, and scholarship, those portfolios are there. And just looking at running it as of this morning, the portfolios are, the equity portion of those portfolios are up about 9.4% through yesterday. So tracking close to the S&P 500. I'm close to the S&P 500, as well as, you're talking about the investment policy, a possible change to a benchmark of the, U.S. NASDAQ U.S. Broad Dividend Achievers. That's up about 11%. So I think overall, the portfolio performance has improved as we've increased the overall yield to the portfolios. If you want me, we can go through each portfolio's performance, which is included starting on page 3. It's in basically, as the largest accounts first going to the smallest. We can go through those if you want, or if there's any questions on those.
Why don't you just give us a summary, since the people at home don't have the paperwork in front of them?
Okay. So if you look at the municipal, starting up with the Merrimack Municipal, it's a 100% bond portfolio. And that year-to-date return, including the cash, is up 0.06%. So again, it has about 40% in cash to meet the liquidity needs, about 60% invested in 1 to 3 year ladder. And in a low interest rate environment, it's generating, a slightly positive return. Next one up is the Water District. Very similar to the one to the municipal account. Year to date, up about 0.04%. Again, has liquidity needs of 40% in cash and about 60% invested, and this is as of May 12th. Next one up is the Principal. So again, this is one of the ones that has an equity allocation. We're a little bit overweight equities right now, as we're finding more current yield in equities than we are in the fixed income portion. So we're overweight equities, underweight bonds, and basically underweight cash, trying to keep these near fully invested to generate the current income. Year to date, the total return of the portfolio is about 5.45%. Bond returns were down 1%. The benchmark intermediate government credit index was down 1.43%. So outperforming by about 40 basis points on the bond side. That's mostly due to duration, a little bit underweight duration, as well as overweight credit. Credit has outperformed government bonds year to date. Equities up 8.31% versus the S&P 500 of 8.74%. And the global equity benchmark, which is that 80-20 mix, 80% S&P 500, 20% in the MSCI ACWI US, some of that international benchmark. That is up 8.26%. So right in line with a global equity benchmark. The next portfolio is income, so very similar to Principal. This return year to date is up 5.59%. Again, very similar. We're overweight equities, as the executive summary summarized, finding better current yield opportunities in this low rate environment in stocks versus bonds, so we're overweight stocks. Bond returns were down 82 basis points versus the benchmark, down 1.43%. Equities are up 8.84% versus the global benchmark of up 8.26%, and the S&P 500 up 8.74%.
And Eric, excuse me, just for the people at home, for the record, the year-to-date numbers you're quoting are through May 12th was when we ran this book, so just for a point of reference.
Yep, I'm sorry, I should have pointed that. Through May 12th. We ran it current to give you as close to performance as we could. Next one up, the School District. Again, very similar. Portfolio is mostly in bonds and short-term bonds, 1 to 3 year ladder with cash, and that year-to-date return is up 0.01%. The Scholarship, very similar to common principal and common income. Overweight equities, about 75% of the portfolio is in equities, about 20% in bonds, and about 5% in cash. And that cash is overweight cash because of the income component. So we're very low in principal cash, but there's income accumulation that we can't touch. That is in income, accumulated income right now. And that year-to-date return is up 6.25%. Bond returns were down 0.98%. The bond benchmark, the Barclays Intermediate U.S. Government Credit Index, down 1.43%. Equities are up 8.84%. Again, that global equity benchmark up 8.26%. And that is the last portfolio that we have in the booklet. Happy to answer any questions on, positioning, asset allocation, or the return so far through May 12th.
I have a question about asset allocation, if you don't mind.
Sure, go right ahead.
The last several days have been kind of topsy-turvy in the markets in general. But I'm just curious, for the coming 6 months and pick a number, 18 months, 24 months, do you see us changing sectors very much? Or are you happy with the current distribution?
As far as stocks versus bonds, or the individual sectors within the equity portfolio?
Equity portfolio.
Again, I think we're going to continue. There may be some rotation, but we're trying to limit the turnover. Trying to, have turnover but not have excessive turnover. So if there's a need to make it a change within the portfolio, be more because of, we don't feel the company's metrics deserve to be in the portfolio. And, with the goal to continue to increase the current income overall to the portfolios. Dave, I don't know if there's anything you want to add as well.
No, I think the main, as Eric alluded to, the main impetus for turnover will be to move to places where we find attractive dividend opportunities. We will, of course, be making strategic moves based on, for lack of a better phrase, the generic markets, but we know the mission here is dividend. Fortunately, that's kind of paired up well in the current moment, in that some of the value and cyclical stocks that tend to be the higher dividend payers are performing well, and so kind of moving, we can address both of those goals with one move. And so we'll keep doing that. We have our equity team approving more names in those areas, Rio Tinto being the most recent one, global mining conglomerate. And so Eric's right, though, we don't want to excessively turn over the portfolio, but we're moving in the direction to keep the yield rising where we can find it.
Let me rephrase the question a little bit. If Company A has some difficulties and you decide it doesn't meet our parameters anymore, and let's say it's Company A is in the tech sector, so you're going to replace it, would you take that money and stay in tech, or would you go to another sector?
It would vary by kind of the opportunity set of the moment. I think generally our analyst team is divided by sector, so if we come to a conclusion that a certain technology name is not up to standard anymore, generally they would be proposing a better idea, but within that same space, such that the portfolio manager can maintain the same sector exposures. However, if there are great ideas being produced by other analysts, and in this sense particularly dividend-paying ideas, and we need cash, then basically we would take our sort of least favorite idea, shall we say, and sell that to upgrade to something better. So it will vary case by case as in terms of what's kind of on offer by our analyst team and by our recommendations of the moment. So I know that's not a decisive answer, but it does kind of maintain the flexibility for as the market changes.
Does anybody else have any other additional questions?
Just curious about cryptocurrency, not expecting that you're going to put this in these portfolios per se, but what is the bank's position on cryptocurrency?
We don't currently have a sort of standard recommendation on that. We're studying it out, particularly things like blockchain and other of the building blocks that are likely to stay around regardless of the end market crypto. The challenge that we face from our fiduciary seat is just the risk-adjusted return. Yes, there's certainly moments where there's some very strong returns in the crypto, and then falls off cliffs. But yes, you have to have a very strong stomach, and the Sharpe ratio thereof is not always conducive to some of the fiduciary standard that we need to meet. An additional challenge is some of the benefits, if you will, of crypto is the anonymity of owning it, and so it's not as easy or seamless to custody crypto for someone else. Typically, the individual has to own it in his or her own right. Now, day by day, the banks are figuring out ways to be an intermediary in crypto, so there's sort of growing opportunities, and I expect before long that conundrum will be solved. So we've been playing some of the crypto impetus is at least parallel to the inflation impetus and potential debasing of the dollar. And so where we are accessing that theme is through gold or commodities or even international equities. Should the dollar give way, some of the international and commodity exposure should benefit, perhaps not to the degree of volatility of crypto. So that's the current outline of what we're thinking about crypto. Does that help answer it?
Personally, I'm confused by it in general, but I was just curious, what the bank's position. So it sounds like you're seeing your bank or other banks as a Coinbase type of conduit or something, similar to what Coinbase is doing. So you'd be a conduit for cryptocurrency. Is that what you're saying?
That, I think, is what would need to happen to make it easier to help clients participate in it, even if it's in a client-directed way. For example, if a client came to us and said, I want you to buy crypto on my behalf, I'll assume the risk, et cetera, we can't really do that as easily as if you came to us and said, I want you to buy Tesla stock on my behalf. Just two sort of different animals, at least at this place in the life cycle of Bitcoin. Now, we could potentially buy an ETF that has Bitcoin behind it, but there's sort of a layer removed from it.
Right.
Now,
great
Fidelity
scale.
and others are pushing to kind of solve some of that custodian-based challenges, such that there won't be as much difference between please buy me this stock versus please buy me this currency.
Yeah, you're talking grayscale Bitcoin or grayscale Ethereum. Those are certainly equities, ETFs, right?
Right.
I think that's
So
what
we could.
Yeah.
That's how we would get at it, but it's not as pure of put some Bitcoin in my name in my safe deposit box or in my deposit account. That's a different.
Right.
You get pretty much the same exposure, so that may be very well fine and sufficient. But I just wanted to note some of the nuance between the two.
Okay, thank you, Dave. Anything else on our own portfolio?
Well, I thought your question was good. Isn't the financial sector getting stronger at this point? What do you think, Eric?
Financial sector has done better. As David was mentioning, more of that, dividend-paying stocks, but also you've seen that steepening of the yield curve, which really benefits banks. Because the interest margin that's built in between short rates and long rates helps banks. So overall, banks have they've done much better this year compared to last year, and earnings, at least for Q1, were relatively strong overall for the sector.
Okay, thanks.
Very good. Moving on the agenda. Next item is the Barry Quimby Fund. a quick shot at that, Eric? I don't think we have much to discuss, but if you'll hit that
Yeah,
one
happy
on the
to.
top.
So we invested the Quimby fund when the funds came in. More of a 46% allocation to equities, and for that equity sleeve, we're using the Schwab U.S. dividend equity ETF, so more of a dividend-paying equity, more of a dividend-paying ETF, and the bond component, we're using the Fidelity Intermediate Bond Fund, and that's about 50-ish% of the portfolio, and a little bit in cash. So about $1,300 in cash. So I think overall, the goal is to, have a couple of holdings in here. It's too small to do individual stocks, but basically getting broader representation. And we use the Schwab ETF as a, in the principal income and scholarship accounts, and the Fidelity Intermediate Bond Fund is more of an intermediate core bond fund. It's going to mimic the return of the Barclays Intermediate Government Credit Index. That's their benchmark. So they have a higher allocation right now to corporate bonds, which is similar to our overall positioning across our portfolios, and very strong management, very strong track record of generating returns.
Thank you. Next item on the agenda is the investment policy. And one of the things that we've had under consideration is if we should put the Quimby Fund as a separate paragraph or two in the investment policy, or if we should just refer to it and say, per the bequest documents, or I notice Amherst has I think it's Amherst, I've started going through other towns, has a separate policy for one fund over another. And you were going to make a presentation on the investment policy. So with that proviso for the Quimby Fund, I'll turn that back to you, Eric.
Yeah, so we sent over a potential changes to the investment policy. It's basically just re-clarifying, for the three portfolios that have, can have equities, just redefining, what the goal of the goal for more current income, possibly changing the benchmark, which we talked about at the last meeting, to the NASDAQ U.S. Broad Dividend Achievers Index. But also, saying that, there may come a time down the road that a different benchmark or a more custom blended benchmark may be more appropriate, to have that flexibility to change that. And just sort of redefining, as far as, the asset classes for the minimum and maximum, not putting a target, but saying, equities can run very similar to what was already in place. But I think we just redefined a little bit of like opportunistic fixed income, can hold, we can have up to 20%, which includes like high yield, emerging market debt, bank loans, preferred stock, and special situations that may generate current income that meet the guidelines. And other assets, include like commodities, real assets, and special situations. So if there's a time down the road, where commodity ETFs or commodity funds start paying a decent dividend, that may be something we would look to add to the portfolio. So I think it just gives a little more flexibility and sort of redefining, the guidelines that were already there, just kind of just rewording them a little differently. As far as adding, we could write a separate one for Quimby, or we could just make a note. I don't know if, what the actual, I'll take a look at what Amherst has written, for an outside fund like that, it should be included in the broader policy or make reference to it as a separate policy.
Well, one of my concerns, only vaguely at this point, is we're all familiar with the Quimby because it's new funding, and we've all read the documents and so on and so forth. But I don't want it to, that distinction, shall we call it, to fade from purview as our board and your staff and all the personnel turn over. We still have to be true to that document. So it needs to be mentioned one way or another, and over time we may change that, but just needs to be there someplace, I think.
I can add that. I can add that. And send it back. Mark up and send it back to you.
Well, I think over the next month, I got two or three other, or we received, two or three other towns, Durham, Londonderry, that were sent to us from the Department of Justice. So we'll take a look at those as well and just see what other people are doing. There may be a way of, we have a lot of talk in the first page or two about what are really treasurer duties. And I'm not sure we need that in the fund or in the policy. It doesn't hurt to have it there. I don't know if you have any comment on that, Tom, or?
I guess I'm in agreement. It doesn't hurt to have it there, but I don't think it needs to be there. If you'd be happier with just a targeted policy that addresses the stuff that you guys are responsible for.
Well, we'll consider that. It's no problem to cut and paste, but if somebody on the outside, so to speak, is reading through the policy, maybe just a couple of different headlines, which I think Eric did in the last one, last draft, a better use of headlines to point out different parts of it. And then if you're not looking for treasurer duties, you can skip to the next headline.
Right.
So Eric, we appreciate the time you've put into it. We'll review it some more, and it'll come up from our perspective again in the June meeting when we get a better handle on what the other towns are looking at, so that as we go through comparisons. And one of the things that has led to some confusion in my mind is the state of New Hampshire, DRA, is trying to make everybody look the same, and their computer portal did that, and it's very confusing to me. So
Okay.
that's kind of, in my mind, one of the things we have to thrash around. Anybody else have anything else on the investment policy?
Well, I just I think we've articulated, back and forth now for the last couple of months, kind of what we want to do or what we believe needs to be done. So I think we just need to make sure we get that on paper. But I think from a communication standpoint, Cambridge Trust ought to be pretty clear on, what our objectives are and strategies for these portfolios.
I think the last time we spoke, Dave mentioned current income, which you put in for I'm talking just the common funds now, current income, and that the income fund is more aimed at total return. And I'm not sure that phrase is in the common income fund description, but I thought it was a good summary. I noticed the Amherst portfolios or policy is aimed at total return, and I'm not sure they have the same philosophy we do, but just to differentiate those two funds, we may take a look at that as well. In the meantime,
I had a quick question, a math question, on the section that talks about asset allocation guidelines. And it breaks down the asset classes with minimums and maximums. If we have a 15% minimum requirement for fixed income, can we have a 90% maximum requirement for equities? Does that work? Wouldn't it have to be 85%?
no.
Okay.
It's a range, as long as you're within that range.
But you could never go to
You could
90.
never-
You could
You
never
could never
go
go
to-
to
Never go to
90%.
90.
Right, you couldn't,
Right.
as long as you got the 15. If you've only got 5, you can go to 90.
But
You
then you'd
still
be
can't
in
exceed
violation
the
of the
90,
minimum.
Yeah,
You'd be in violation of the minimum though.
right.
So it can't be over 85%.
And this is probably the way it's been, but it just jumped out at me, and as an accountant, that math doesn't add up.
I remember struggling with that question the first time we did those ranges or reset them some time ago. And the feeling was that none of those things, or adding up all of those things, if you went to the maximum in each, then yes, it exceeds 100%. But I think the point was we didn't want to have more than 15, I don't remember the exact numbers, but didn't want to have more than 15% in cash. But if we had 5% in cash, then certainly we could be 90% in equities.
But not if you have to be 15%
You don't have to,
minimum.
oh, if the 15% minimum, yes.
That's the one I'm struggling with. It's
Yeah, okay.
the minimum maximum.
All right, we'll take a look at that.
So is that percentage, of the total portfolio or just, the part that's invested? In other words, the value of the whole portfolio versus the value of everything that's invested, eliminating the cash element.
Fair question. In some instances, 15% as a minimum for cash is high. But we need to re-examine that whole group of numbers, I think.
Yeah, I was just going back over what Eric covered before.
Yeah.
Okay, well,
Okay, that's pretty much it for the investment policy. Thank you for all the work you put into it, Eric.
Okay,
thanks, Eric.
you're welcome.
Next item on the agenda is correspondence. The first item I have here is DocuSign. And we don't have a policy on that.
Do we need Cambridge Trust on this, or?
Well, they triggered the discussion.
Okay,
When we had the documents for the Quimby Fund, we had an email from Cambridge Trust about, can we use DocuSign?
Right.
And we did not have DocuSign in the policy, so nothing wrong with all of that, but we just didn't have it as a policy. And I didn't want to give my single approval for what should be a board decision. So we went back with hard paper
Right.
type stuff. So that's kind of what triggered it. And if you think the ability to use DocuSign or other electronic signature procedures, then I would think a motion to that effect would be in order.
I would motion that we allow DocuSign as a methodology to sign legal documents as trustees of the trust funds of the Merrimack, New Hampshire.
Are we gonna put any limit to the value of what's involved in the fiduciary responsibility of signing something on the internet? I mean, I use DocuSign and all my other boards, but I mean, here it's a unique thing. We have actually a monetary fiduciary requirement. Can we DocuSign for like $5 million, or, I mean, anything that,
We have checks and balances between the three of us, so I mean, each one of us independently is gonna DocuSign. Each one of us can choose not to DocuSign too.
yeah, I guess that's fair. Yeah, I feel comfortable with DocuSign, actually.
Okay,
just
so that's a
plain-
second.
Yeah, it's a
Yeah.
second.
Depending upon what institution you're dealing with, that institution may have their own limitations. So for example, I was doing a wire transfer, thought I was gonna do it online last week, and I got halfway through the thing, and then it starts talking about, well, yes, but you need a medallion signature if you're going over $100,000.
Right,
You need
yeah.
to do this if you're going over $100,000, and all of a sudden, the convenience of doing it online disappeared.
Right, that's what I was getting at.
Yeah. So I think those limits are there external to us.
There you go.
Anything else that anybody wants to say about that? Do you ever have any, do we, as a town, is there a town policy that we need to be aware of, Tom?
Not that I am aware of. We're doing hard copy paper on everything at this point.
Then I would say we can do, we're independent as an elected board. But if there comes a time when the town is looking at that, I hope you'll keep us apprised of any changes.
Definitely.
I mean, I do business with some pretty big companies, include the Hearst Corporation, and they do DocuSign, so I'm pretty
Yeah.
comfortable with it.
Anything else from Cambridge Trust on DocuSign?
Not really. We thought we would use the DocuSign procedure in an effort to streamline the account opening of Quimby Fund, but as it turned out where some of the trustees had difficulty accessing the documents, we chose to print them and mail them to all the trustees, and that's how we were able to, complete the account setup.
Okay, so I'll call the question. All in favor?
Aye.
Aye.
All 300. Thank you. And I think that's everything we have today that impacts anybody at Cambridge Trust. So if you have anything you want to add, Judy or Eric or whoever's still on the phone, now's a good time to add it in, or we'll say goodbye.
No, I'm all set.
Thank you very much.
Thank you all. We
Thank you.
appreciate your
All
time.
right, thank you.
Thank you.
Thank you.
Thank you.
All right. Take care.
Okay. Next item on the agenda is just a quickie. Bill mentioned earlier the questions about the price of lumber. And I sent an email to Bay State Forestry just to see if they had any input they wanted to give us in terms of is this a good time to harvest or not? And I have not heard back from them, but just wanted you to know that's an ongoing event. They may, I suspect this time of year they're out in the field and not tracking all their emails.
Well, I
But
know-
we'll just want to keep that in mind.
I know they had some open job positions, so maybe they're a little understaffed at this point.
Well, I think the foresters themselves don't necessarily manage all the administrative stuff either. So, anyway, that just to let you know, that's a potential for future agendas. The next item is on May 14th, I contacted Merrimack Flower Shop for our 3 flower funds to get.
Your conference is ending now. As requested by the host, please hang up.
All set?
Yep.
Thank you.
Yeah, there's a new owner of Merrimack Flower Shop, right?
Right, but Dan Hawk is still working there. So, he's been the one delivering flowers and so forth, but I just wanted to make sure we kept track of that. And what I'm looking for today is I would expect a bill to come from that sometime prior to our next meeting, and authority to pay the bill as it comes in. It's usually a little over $100.
Okay, I move that for approval of paying the invoice for the flower fund. when it comes
Second.
All in favor?
in. Aye.
Aye. All opposed, 0. Abstentions, 0. Thank you.
Just a quick question on that comes to mind. So you say that you order the flowers?
Yes.
Is that what a trustee should be doing, is ordering flowers? And I don't mean that in a negative way, I'm just wondering, like, is there a better mechanism, you know, so that whoever is sitting in the chairperson's chair doesn't have to order the flowers? Or shouldn't that be something we approve the payment of, but not the actual mechanism for ordering the flowers?
You're confusing me a little bit. It's actually been a standing order for some years, and the reason I called is because of the turnover at the Merrimack Flower Shop. So, I can't point you to a set of minutes sometime in the past, but generally speaking, if we have a fund, whether it's a scholarship or a flower fund or a gravesite care, the work gets done and we get a bill.
I'm just
But
wondering.
we do
like-
have a responsibility as a board to make sure that the work is done as well, so, let me rephrase that. How would you prefer the sequencing go?
I'm not sure I know the mechanism to do it, but I'm just concerned, like 15, 20 years down the line, there's different people in these seats, that they don't forget to order the flowers.
Would you have had the call if there hadn't been turnover at Merrimack Flower? Would you just have relied on them to do what they always do, or?
In the past, they've called me and said, we're doing this. I said, okay, send us the bill. Previous to this, prior to 2007, one of the trustees bought the flowers and installed them himself and was paid a stipend for doing that work.
That's right, yeah.
And at the time, we discussed that and said, that's really not appropriate. Number one, to be paying a trustee a stipend for doing that. And number two, in this case, for the same person to be signing the check. So that instituted at that time, that would have been 2007, the new procedure of ordering and having a standing order and getting a bill.
Yeah, it wasn't me that got the stipend back in 2007.
I thought I saw you out there playing flowers back then.
I think that was Dave Johnson that took that upon himself to do that.
I'm not gonna,
I mean,
I'm not gonna
let's-
use names.
Let's not go too far on this. I'm just
Okay.
wondering, like, you know, is there a better mechanism where they could, quote unquote, be automatically ordered? We get the bill, we approve the bill,
Right.
you know, versus Chris having to call and say, hey, did you, I want to confirm the order for that, cemetery. I mean, should the cemetery board be ordering the flowers and we approve the payment?
I don't think they do that, but I don't know for sure. Worth checking on.
Or should,
I think you always stand the chance of something like that getting dropped when there's personnel turnover.
and that's what I would want to avoid.
Yep. Well, I'll tell you what, if you have a new procedure, I think, bring it up and we'll talk about it. That's what we've done so far this time around, is the flowers. We confirmed that they were being ordered, delivered, and that we will get a bill.
Does Rivet have anything to do with ever ordering or putting flowers on different graves, or, I mean, other than just when there is a new grave created? Or does he do anything on an annual basis? Or do we know?
We don't know. Obviously, the more people get involved, that is third parties, the more people get involved, the higher the overhead. that isn't actual flowers, but is administrative or delivery charges. So, it's worth looking at. And I'd be happy to have your report.
Just what I need. I mean, if I run into Mark Rivet, I'm gonna ask him
Sure.
if they have any, if somebody had a spreadsheet and he had a designated person and they call for 20 orders of flowers in a year and, we tacked our 2 on the end of it, or 1 or 2, or whatever it is, 3, and we knew that, he's gonna do that.
Yeah, he would probably want some kind of a stipend or commission.
Oh, I'm sure he would. I mean, he's in business to
Yeah.
make a living.
I will say that at one of the DOJ seminars, Terry Knowles said that their position is they recommend that you not accept new flower funds because of the cumbersome administration. With only 3 of them, and they've been in business or in place for a long, long time, seems to work out. But I'm sympathetic to her thoughts that maybe this isn't a good business for the trustees to be in.
I think I concur with her. Move on.
Says here, upcoming meetings, June 18th,
Okay, I've got that marked.
no July meeting. And then August 20th, which is the point at which we would approve the new end-of-year reports and the new investment policy.
Okay.
And
That's it.
then, is there anything else we need to talk about? I will say, after the meeting adjourns, I have some more paperwork to pass out.
Okay. That's just that this is a big, for 2 of our entities, this is a pretty big time of the year financially.
2 of our entities.
Well, the town, of course, and maybe for all 3, the end of the fiscal years.
Yep. So do we have a motion?
I move we adjourn.
I will second that.
All in favor?
Aye.
Thank you all very much. We are adjourned, and it is 9:58.